Hello, everybody. Happy Wednesday. My name is Dina Nall. I am a senior consultant here with Fourlane, and we are going to be talking about job work in progress and deferred revenue today. So, some of the topics that we are going to cover are going to be our job WIP. We can use that for manufacturing work in progress. We can use that for projects where we bill our clients in phases. And then deferred revenue, right? When we have customers that are prepaying for services that will be rendered in the future, or for items that will be delivered in the future, or when we are asking our customer to place an initial deposit on the product or services that we are selling to them. So let's jump right in here. Switch over to my QuickBooks. All right, so we're going to focus today on the job work in progress for projects. Right? Within QuickBooks, we have the ability to set up our projects individually so that we can track the revenue and the associated costs for those jobs. That way we can look at each job by itself and say, were we profitable? Did we make money on this job? Or do we need to modify the way that we are estimating for these jobs or the way that we are billing for these jobs? Okay. So if we look at our customer center here, so if we look at our customers here in QuickBooks, we can see that we have a head customer, right? That's kind of called the parent customer. And then we have our jobs underneath each of these customers, right? So when we create our estimates, we can create estimates that are specific to the jobs that we are doing, and then we can associate our costs with those jobs. So what that looks like here, I've created an estimate for this particular job, this kitchen remodel for this bakery, okay? I've put all of the items that I need here. I've estimated the time, what the rate is, I've added a markup, etc. So once my client has approved this, right, we can then move forward with the job. And there are a few ways to do this. If we are going to ask that client to pay a portion of it in advance, right, we can receive a payment against our estimate. This is actually a fairly new function to be able to do that against our estimates. So that's really, really helpful. And so what that does when we take a prepayment from our customers is we haven't earned that revenue yet. So we call that deferred revenue. And so these work in progress and this deferred revenue, they kind of cross paths, right? So we take an initial deposit. We want to make sure that when we do that, we put that to an other current liability account. So it will sit on our balance sheet and say, yes, we have this money, but we still owe those services to that customer. Okay? So let's walk through that process here, right? We're going to get a little pop-up that says, once you create this, you can't change it, okay? So we're going to say that they are going to pay 10% down, okay? They'll pay by check, and we'll put a number in here. And we can then choose, right? We're using an estimate, but if you had moved this to a sales order instead, you could take a prepayment on the sales order. The process would remain the same. It's going to put it to the same place. So once we save and close here, I have the wrong date selected here. There we go. Once we save here, okay, if we go and we look at our balance sheet, okay, we're going to see down in our other current liabilities, this customer deposits account right here. So what this amount tells us is that our customers have paid that much money in advance of receiving their product or service, and we have yet to fulfill that, right? So we still owe those clients that amount of work, okay? If we double click into here, right, we can see everywhere that this has been used, right? So we have a couple of sales receipts here, and you'll see that each of these should have its own offsetting entry, okay? So this is where our customer has paid the amount, and this is where our customer has used that amount on a remaining invoice. Okay? And so you'll see that this $17,000 is still sitting here. That is from another payment, another project. And if I move this to tomorrow, because that's the date that I used, we'll see that 846 that I just took in a payment, okay? So this tells me that I need to make sure I complete this work for my client, okay? So we come back to our estimate. Actually, I'm gonna go back to my customer center, and we're gonna say we have now incurred some expenses for this job, right? So if we enter a bill, maybe we're paying a consultant, okay? Now we can choose to pay our consultant with just direct expenses, or we can use items, right? Since we have items on our estimate, right? Maybe you want to correlate those two so that they match, right? So that we know we've estimated X number of hours for this specific service. How many hours did we actually get, okay? So I'm going to say no on that, okay? Now the important part here, if we want to associate this cost with that job to be able to see an accurate work in progress report here in QuickBooks, is that we associate this with the customer, okay? So this is related to this kitchen remodel. And then the other important piece here is whether this is billable or not. Now, if we operate on a model where we bill these costs directly back to our customer with a markup, you can leave this check, and you should leave that checked. If, however, we're going to bill off of the estimate that we provided and not necessarily directly from our expenses, we want to make sure that we uncheck that. If we're using classes, we can assign that here. Otherwise, we can hit save. And you will see now, if we look at our P&L, okay, I'm going to change that to the correct date. So if we come down here and we look at our expenses, right, whatever expense account that item is associated with is now going to have that amount associated with it, okay? The next piece, now that we've incurred, even if it's just one expense, right, we want to see what our work in progress looks like, okay? So we go to Reports, Jobs, Time and Mileage, and Job WIP Summary, okay? Now this brings us here. So this lists each of our customers and each of the jobs that have an active estimate. Okay? If we don't have an active estimate, it won't populate here. So we can see, here's what our estimated cost was, here's what our actual cost has been, and then QuickBooks does the math for us and says, based on the costs you've incurred, you're 2.66% complete with this job. Okay? And then we have our revenue, right? So that's why it's important to put that markup on our estimate. So we can see here's what our estimated revenue is. This earned revenue piece, this is based off of this percentage complete, okay? And then you can see our actual revenue, okay? We can see what our difference is. So what we want to look for when we're looking at these WIP reports is, are we on track? Have we billed our client in line with the work that we've done? If we're a business model that bills in advance of the work that needs to be done, right, then our actual revenue, the amount that we've billed our client, should be more than what our percentage complete is, right, because we're billing in advance. But if we're billing for work that's already been done, right, then these percentages, this percentage should match to what our actual and earned revenue is at that point in time. Now with each of these, anywhere you see that little magnifying glass with the Z in it, you can double click and you can zoom into whatever makes up that value, right? So if I double click here, that's going to take me to the estimate, and then I can see the information on that estimate. I could add the item column here if I wanted to know specifically which items are on that estimate, or I can double click here to go into that estimate and see it for myself, okay? So if we look at our actual costs here, right, we can see that it was just this one bill that we've paid so far for that job. But if we look at, let's say, this one, our Main Street Middlefield, we can see that we've incurred quite a few costs, right? So we have bills where maybe we've paid for certain expenses or for consulting fees or whatever else we might have, but we can also see that we have paid payroll expenses. We've paid direct or indirect wages that relate to this project or this job. So you can see each of those, right? Make sure that all of these are correct. I recommend reviewing this every once in a while. Sometimes you might find that something just got miscoded, right? Doesn't hurt to go through things just in case, okay? But you can see what makes up this total $23,000 that we have spent on this job. And now based on that cost, right here, you can see that we are 8% done. So even though we have revenue of $67,000 from this client, we've really only earned $28,000 of it, okay? The rest of that would be deferred revenue. So let's take a look at a couple of other reports, right? When it comes to tracking work in progress, when it comes to tracking how far we are complete, how much we have completed, right? We have a few different options. So if we bill in phases, this progress invoices versus estimates, this is going to be very, very helpful because this will tell you, again, just the open estimates that we have, and it'll tell you it's active here. Here's what the estimate is. Here's what we've invoiced so far. So here's what percentage we've billed for, right? So we could take this and put it side by side with our WIP summary report to say, does this percentage line up with this percentage, right? So we've billed for 10% of it, but we've only expensed for 2%, 2.6% of it, okay? So that's something that we want to keep an eye on, make sure that we aren't expensing more and forgetting to bill our client, or vice versa, billing our client too far in advance of incurred expenses. Okay? So we want to keep track of that. Now, when it comes to the deferred revenue piece of this, right, we do still have those dollars still sitting here in our customer deposits account. Again, I'm going to move one day forward here. So we have those amounts sitting in our customer deposits account. How do we use those? When do we use those, right? So if we go back to my customer center, to the estimate, and you can see the corresponding payment here, right? This payment, remember, is sitting in not undeposited funds, customer deposits. This is a prepayment. It is unearned or deferred revenue. And maybe we have set our business up where we ask for that initial payment, but we kind of hold that until the last invoice, right? Kind of like a retainage, right? So how do we know when it's time to bill that? Okay. So as we progress through our project here, right, we're going to create invoices. We can create our invoices for different percentages depending on what phases we've done, what percentage we've done, right? We can do amounts or percentages. And this screen is also going to show us what we've billed previously so that we know, right? So if we've done certain percentages of each of these things, okay, we say okay. And then QuickBooks is going to put that information on here for us, right? So we've got this amount here. Now, when I hit save, I'm going to get a pop-up that says we have credits, right? Because we have that prepayment credit. If we are the type of business who saves that prepayment till the end for that last invoice, right? Then we would want to say no here. However, if we have our business set up in a way that that prepayment does get applied to the first invoice, or we just apply it as we invoice, right? We could say yes. So I'm going to say yes, just so we can see what that looks like. Okay. It's going to show us, here's the prepayment. It's going to tell us exactly what it was, what amount it was, and then how much we should use. Okay. So this $498, that would cover this invoice in its totality. And then we would still have a little bit of credit balance left. So this $347 then would stay in our deferred revenue, our customer deposits liability account. And this $498 is going to be shifted over to be recognized as revenue. So we're going to say done here. Again, nice little warning, once you apply this prepayment to an invoice, you can't make any changes later. And then QuickBooks in the background is going to make the journal entry to move that from your liability account to your revenue account. Okay. So if we wanted to see what that looks like, we can come look at our transaction journal, okay? So we can see this full amount here hits our accounts receivable. We've got our engineering revenue here, and then that was the total, right? When we go back to the balance sheet and it refreshes, okay? We look in here. I'm gonna change my dates here, okay? So now we see that $498 of that has come back out of our liability account, okay? My dates are a little funny, right? Typically this would be after that payment, but I used a different date, so things are a little bit off here, but you can still see that that $498.75 is no longer sitting in our liability account. Okay. Oh, I hit the wrong button on that. Okay, so let's keep going. Let's make another invoice here for this customer. And I'm just going to go ahead and invoice the rest of it. We're going to fast forward, and we've done everything that we need to. We're going to build a client one last time. Okay. Now we can see here, right? Here's what the estimate is. Here's what we've previously billed. And so QuickBooks is going to automatically fill that in. If you've selected to bill everything that's remaining, QuickBooks will fill that amount in for you. Okay. So if we wanted to see something, right, maybe instead of fast forwarding, right, we've done this in phases. We've issued maybe 2 or 3 other invoices to our customer. We want to look at our progress. Okay. So again, this kind of shows you the same information that you're going to see here, but it gives you the ability to modify that here as well if you wanted to track quantities, right? I know on the estimate we had put in, we expect so many hours in quantity, right? You can adjust that based on the quantity rather than the amount or the percentage. You have that option as well. For this example, we're going to fast forward and we're going to say, okay, this is done. And now our client owes us this remaining balance, $79.61.25. We are going to go ahead and apply the remainder of that credit. Okay. And so again, QuickBooks is going to use all of it. That's going to leave our credit balance at 0. That's exactly what we want. Okay. Again, if we make changes, we can't, if we apply it, we can't make changes, and that's okay. Okay. So we're going to save and close, go back to our balance sheet. Okay. And you'll see here that this amount has changed. And if I update my dates here, you'll see now these two amounts equal this 846. Okay. So that has been used, right? So we have the in and the out, right? Those numbers match. They won't always, right? Maybe we took a larger prepayment and our customers used it in pieces, right? So we may have to do some matching to make sure that our customer has used all of their prepayment. All right, so let's go to our WIP report again, and let's see what that looks like. Okay, so our estimated cost, we haven't recorded any new costs for here, so that hasn't changed, and our percentage complete hasn't changed, but we can now see our estimated revenue and our actual revenue, right? Again, our earned revenue is going to be calculated based on that percentage complete, but we can see that we've actually billed our client for more than what we expected to. And we can double click into that to see exactly what that's for, okay? And if we look at our progress invoicing, this one here, we can see that this is now 100% invoiced. So that job needs to be closed out, okay? So what we would do here is we would open up that estimate and we would mark it as inactive. We've billed it, we've completed the project, we're done. We're gonna mark it as inactive and we're gonna say save. And then it should, we removed our little check mark here. So it's no longer an active estimate, okay? Another place we can see those active estimates, right, is gonna be here, right? I went to my Customer Center, the Transactions tab, and I can filter this just for open invoices. And you'll see that that one that we just completed, that kitchen remodel, no longer shows up here. If I say I wanna see all the estimates, there it is, but I can filter that down, okay? So let's go back to the idea of maybe we're a firm that takes a prepayment from our customer, but we don't use that, we don't apply that to their invoices until that final invoice, right? So then how do we track when that payment needs to be applied? Okay. If you've taken a prepayment, so for this particular job here, I've got an estimate. I took a prepayment on that estimate, okay, for $17,812.50. So as I'm going through and I'm invoicing off of this estimate, I'm going to continue to get that pop-up that asks if I want to apply the existing credits that that client has. And the default for that situation, if that's how our business is set up, is going to be to say no. on that pop-up, right? We don't want to apply that credit yet. We are holding that until that final invoice. How do we know when it's time to do that? So we can run an open sales order by customer report, okay? Now by default, this is gonna show us sales orders, but we customize and we can change our transaction type to be estimates, okay? And I actually already saved this. I pinned it up here to my taskbar so that I could easily access it, but I wanted to show you how to get there, okay? So then we can see, here's this estimate, here's the total amount, and here's what that prepayment open balance is, okay? So as we're invoicing off of our estimate, this number will decrease. And when we see that this number is at or getting close to this number, right? That's when we need to take a look and see if we need to start using that credit. We want to make sure that we don't bill the client and have them overpay, right? And then we've got a credit sitting and we have to figure out, do we offer additional services? Do we offer a refund? How do we manage that, right? So as we're billing, we'll reference this report pretty frequently so that we know when it's time to bill, to use that credit for that customer. Okay. So if we come through here, here's our estimate. I create an invoice. Okay, so I'm just doing a flat rate here of 75% of what our estimate was. I'm going to say save, and again, I'm going to get this pop up here. I don't want to use that, not yet. Okay, so now I'm going to go look at that open estimates again. I'm going to see I still have $89,000 to bill for this particular job, so it's not time for me to use this $17,000 yet. So then I would take this and I would send this off to my customer and say, yep, you got to pay the full amount here. Okay. Oh, that is not the button I wanted. There we go. Let's make one more and let's finish it off, right? Let's do the remaining amounts of the estimate here. Okay. Now we know this $89,000 is greater than what they have in their prepayment. So if we're billing this part in full, we're going to bill the remaining $89,000, then we do want to apply that prepayment. Okay. So we'll get this prepped, we'll say save, and on our pop-up here, we're going to say yes, and we'll apply that full amount here, and we're going to say done. Okay. So then this is what we would send to our client for final payment, right? This says, yes, we're billing you for the final $89,000. We've applied your initial prepayment of $17,800. So here's your remaining balance. Okay. So when we close out of here, let's go back to our balance sheet. Now, if we look here, we don't have a customer deposit line anymore, okay? Because we fully zeroed that out. If I go to my chart of accounts and I go to my customer deposits, you'll see we've got a zero balance. So when I run a report then, I like to add the debit and credit columns because I like to see the ins and outs. Okay, we can see we've got our ins and outs. Okay, here's that in and there's that out, and then these two correspond to that one. So how do we make sure that our customers are actually using their prepayments or that we are remembering to apply those customer deposits? Okay. So QuickBooks will allow us to reconcile almost every balance sheet account. So my recommendation is always to reconcile this account as frequently as you feel like you need to, right? If you take a lot of customer prepayments and you're applying them and you have a higher volume of transactions that would go through that account, maybe you need to reconcile once a week. If you only take prepayments every so often, maybe you don't need to do it but once a month, right, with your regular month-end close, okay? Because this is a non-statement account, we are always going to reconcile this to zero, okay? Because the idea here is that that account is always going to zero out, right? We will always use the money that we put there. And then what we're going to do here is we are just going to select the payments and the credits that match each other, right? So this 17,000 here goes with this 17,000 here. 1,500 goes with 1,500. And then we know, because we just did these, that those go together, right? And so you can see here, we've reconciled to 0, and we'll say reconcile now. You can print these reports if you want. Otherwise, I just say close, okay? So then that tells us, right, if there were a balance remaining in there, that would tell us that yes, we've reviewed all of the transactions here, and yes, that balance is what makes up our real liability to our customers. All right, do we have any questions? I don't see any. So that is everything that I've got for us today. I hope you enjoyed, and I look forward to seeing you, and I hope you guys have a great day.